Number 9, if you follow the above carefully and the bonus point I'm about to give you, you are more likely to put a signature on a contract that will benefit you and help you achieve your goals. The following is a list of 9 things you are likely not to be told by your insurance service provider or agent. Getting ahead of them to ask the right questions is the only way to win and signing up to exactly what you need to achieve your financial needs or goals. Insurance is not a monster. People tend to miss a basic step that would keep them safe. Just like fire, it's a great servant but a terrible master. Be sure to watch till the end. You don't want to miss any of the steps. Number 1, the life cover benefit is not free. If you're out to take a cover, an investment or savings product, the life cover benefit included is not free. The cost is usually a portion of the premium that you're supposed to pay. It is usually disguised as being free and mostly used to score a point against you and show you how they are generous enough to give you a free life cover on top of giving you a savings service. Knowing this should help you in making your next decision, especially when signing up for a savings or investment product. Make sure to ask about the life cover and how much of your premium is going to settle the life cover costs. This helps you plan better and make a decision whether what you are signing up for is the best route towards achieving your goal. This does not mean that the life cover is unnecessary, but that I will cover it in another video. So if you have not subscribed, please do and turn on the notification bell so that you will stay informed whenever I post. Number 2, not all your money is invested. Although this may seem a little bit obvious, I hope that you're aware that not all your money is invested. Assuming you are contributing 10,000 towards your savings goal, it is important to be aware that just like the previous point, a portion of your money will be paying for the cover. That's if the product has a cover benefit, sometimes called riders. Then a portion of your money will be paying for the expenses together with the cost of running your savings or investment plan. But before you become annoyed, it is good to know that when you are saving money, you are being offered a service and therefore the company has to meet costs. In other words, someone is going to the market to invest the money for you and to make sure that everything is in order. And it is unfair to expect that these people will not get paid. Of course, they're not going to be working for free. So what you need to find out is the cost that you're going to incur and if it has a big significance in your total outcome. Remember to ask about the management fees and any other related costs that will be implied upon your savings. Number 3, surrender value or waiting period. Most products come with a timeline from the point that you signed up for them in which you are not able to access any portion of your money. It could be 30 days, 3 months, 2 years, and at times even up to 3 years. This is a very important thing to know when signing up for any insurance product. Sometimes it applies to the life cover side or at times generally affecting your entire cover or savings. For example, you could be told something like, there's a waiting period of 3 months before we pay any medical bill, or something like we do not pay any natural deaths if the death happened between the first 30 days or the first year. Another one mostly used in the medical insurance side where they will say something like for any chronic condition, there has to be a 2-year waiting period. So if nobody has told you about this and you did not ask about it, in most cases, at the point when you'll be needing the services, when you will realize that it's not available. So do not sign or commit until you're clear on the waiting periods and when you can be able to acquire surrender value from your money. But this is not entirely evil because there are people who have taken advantage of that, especially when they know that they have a condition and they want the insurance as to become their scapegoat, or rather a way to get rich quick. So because I've been diagnosed with some condition that is tricky, then I run to the insurance so that they take care of the loss and pay for my predetermined financial problem. Number 4 is utmost good faith, or the danger of omitting material facts. Intentionally or unintentionally, you might leave out some important information that you should have provided at the time of signing up. And that is a grave mistake. Apparently, the questions that are asked during the signing up process are meant to help the insurance company assess whether they are willing to take the risk or not. And in the process, they could also decide whether the premium that you're going to pay is going to make sense for them to carry your risk. Therefore, if by any chance you decided to ignore a certain question or rather twist it so that the insurance company still goes ahead to give you the cover, what many people don't know is that usually during the claim process, an interrogation is done to figure out exactly what happened. For example, you fail to disclose that you smoke or drink while taking up that life cover. What is going to happen at the point where perhaps death has happened is that they are going to ask for the report from the doctor, and then the doctor will definitely indicate, or rather on the post-mortem, it's going to clearly indicate that he was intoxicated at the point of death, or the cancer was caused by some excessive smoking or something like that. And because of that, the claim will be declined and no payment will be done for the same. My advice to you is try to always be as honest as possible when you are filling the forms. In most cases, ensure that you are physically available or ensure to go through whatever your agent or intermediary has written before they make the submission. Most of the time, the agents tend to go ahead and fill whatever they think about instead of what is supposed to be written as the truth. Don't allow the insurance companies to have a field day when it comes to your payment day. It's better for you to be declined from the onset rather than go on making payments for a plan that you think that you're covered but will eventually not pay. Number 5, insurable interest. Who you choose to include in your cover matters a lot, either as the covered or as the beneficiary. Many people are not careful with whom they include as their beneficiaries or as part of their cover. This is a mistake that could be or should be avoided, and one that you should ask very carefully at the point of signing up. I've seen many covers being declined at the point of claim, basing it on conflict of insurable interests. And could be something like we took a funeral cover, me and my brothers and sisters, and then I'm the one who made the payment, and somehow I was indicated as the beneficiary if anything happened, that I'll be the one who is supposed to go and claim. Now at the point of claiming, the company is likely going to flag the claim citing some conflict of interest, or rather an intention to gain monetary value from the insurance claim. In short, it seems like I paid to benefit when you die or get sick and you are not my nuclear family. Number 6 is exclusions. The other concern that you should have when signing up is under what circumstances are you not going to be paid a claim? And this applies across all insurance products. There is something that is known as exclusions. Exclusions are those circumstances under which a policy or a cover will not be paid. And for that reason, it is very important that you are clear from the onset. Some covers do not pay if it is outside working hours. Some covers won't pay if you went paragliding or parachuting or doing some extreme sports. Some covers do not pay if you found yourself in riots or demonstrations. Some covers do not pay if they happen in the first year or something as random as that. And because of that, it is important to be clear what is the exclusion which is included in this policy. In number 7, there could be a better alternative to the product that you are taking. This is what people will not want to hear, especially after they have already signed up for the product. In most cases, you will find that a company has several options available that will be able to take you to the specific financial goal. But what many people fail to realize is that from the company's side, there are certain products which are more profitable to the company than others. And whenever a product is more profitable to the company, they will always find a way to incentivize their intermediaries and agents to sell more of the same. And this usually comes as either more commission or more incentive on certain products. I know this is the part that most agents are not going to like me, but for the sake of you, my consumer, and my viewer, it's always important to ask this question whenever you are at the point of signing a document. Always ask for alternatives to help achieve the same goal. Assuming that you are a distributor, for example, and you have two brands of water. One pays you 40% commission and another one pays you 5% commission. The one that pays 5% commission, say, has some extra vitamins which are essential for the body that are not available in the brand that pays 40%. It really takes a lot of character to recommend the product number 2, which pays less commission to the client, knowing that it will be beneficial for them and not to your pocket as a distributor. The regulator has indicated that it is your right as a consumer to know how much commission your agent is going to be paid from the product that you're signing up. So for that reason, it is okay to ask how much are they going to make from the option that they have offered to you and the one that they are pushing as the best. The more the commission usually means the risk is slightly higher. That's my opinion though. Don't be afraid to ask all these questions. They are going to save you a lot of money that you would have put in the right place and achieve more. Considering your type of employment, the job risk, and many other factors, there could be a better alternative that doesn't pay the agent as handsomely as possible. And because of this reason, you may end up in a risky tightrope. I have left a link description to a short book I wrote to help you make the decision on which product to settle for in order for you to achieve your financial goal and also what alternatives are available. I believe it's a must read so that we'll stop the premium tiers we see happening in the field that is meant to be sorting out our financial problems. In number 8, most of the agents are new and untrained. I'm telling you, this industry is full of successful players and at the same time, even a bigger bunch of newbies. That's mostly because it's not one of the easiest trades to be a part of. Yes, it is one of the best paying jobs in the world with a lot of freedom if you use it very well, but many fail and quit when starting out. This necessitates the continuous recruiting of agents that will help fill the gaps that have been left behind. Most companies will have at most 15% of their staff at any given point who are experienced. So majority are the unexperienced. The experienced one know options and they have grown virtue to the point that they know how to balance profit and giving out value. So something you might not be told is that the agent sitting next to you doing a presentation could be inadequately trained or experienced to guide you towards a big long-term financial goal that you're about to make. Some companies thoroughly train their agents, but please always ask nicely if you can to know your agent better. Some are out there to make a big commission and run without caring about the client. Remember, you are getting into a contract with the company, but through an intermediary who might not be there 3 months down the line. And the company will say, oh, sorry, you were misinformed, and then they'll blame the agent to run away, but that doesn't change the fact that you won't be excluded from the consequences. Number 9, if you follow the above carefully and the bonus point I'm about to give you, you are more likely to put a signature on a contract that will benefit you and help you achieve your goals. And now to the last point that you are not likely to hear. Best summarized in 5 words. Read the terms and conditions. Nobody is likely to tell you this, but your winning or losing depends on these 5 words. Read the terms and conditions. Check out my book titled The Expose in the link on the description below, and see you in the next video. Remember, if it's about money, investment, and business, then that's the conversation we'll definitely have here on Moneyversation. I'm so glad to have had you. See you in the next video.